Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody. Today's Friday. It was really tough week for Forex market. And today we again will take a look at the euro currency. So the major idea that we have discussed yesterday when we have talked about the Fed meeting and the policy that Fed intends to follow in the nearest time till the rest of the current year and the next year, we said that actually Fed hasn't said something really dovish. So they just said what market already knew. So market mostly expect the rate hike in December. It's very probability right now is more than the 60% by the Fed fund futures rate. This is the futures on the federal fund rate. The December futures shows that the chance on rate hike in December stands above the 60% or even maybe greater right now. Speaking in 2017, they have said that they will follow the careful policy, but currently the major expectations that we again should get a couple of rate increase in the 2017 as well. So yes, that's maybe not as superb and aggressive as some traders thought, but still this is the tightening of the policy, the rate hike, and as a result the rate will be something around 1% or even greater, 1.25, something of that sort. Well, and still this is the direction for the US dollar strength. That's why yesterday, as you can see, although reaction was to the upside and mostly shows some kind of the disappointment, but despite of that, the perspective of the rate increasing has not disappeared, and it's still here. That's why after the short-term a bit emotional reaction is followed, right now is coming the reality. What really is standing on market right now. So what we see. Yesterday we have seen market at 1250, and we said that this will be major level to watch for, because if market will break it up, this will very good sign for a further upward continuation. And if market will break the neckline, the trend line of the triangle that we have on the forward time frame chart, that will simultaneously mean that market will challenge the neckline that we see on the hand shoulders pattern, and probably market could go further to the upside. But take a look what has happened. Some common sense, reasonable assessment of the world situation has led to the pullback on the forex market, and it seems that investors have come to reality and understand that the rate increase is still here and it will happen. That's why currently it's not really a lot of reasons to sell the United States dollar, at least on the background that we have in the Europe economy and in general situation. That's why we still keep watching of the consolidation on the euro currency, and there's still the major level is the same, so 1130 area. And probably on the next week we will get some solution of this situation, because take a look on what we have on the forward time frame chart. Here, guys, we do not have the bearish grabbers, but theoretically they could appear, for example, today or even on Monday. So if market will test the MACD predictor, in this case it could drop further. While here, guys, we could get, if this will happen, market will not able to exceed this area and will turn down. Here, guys, we could get the butterfly pattern. So if we'll measure the extensions, so that will be 110.50 area, and next level this will be 110 sharp approximately. But this is only the butterfly. As we said, if market will fail around the bottom of the shoulder, sooner or later it will appear right at the bottom of the head. This is just how head and shoulders failure works. So now we need to keep an eye on the possible signs inside of this triangle that we have on the 4-hour time frame chart. Maybe we'll see something. So on the 4-hour time frame chart, there are two important moments here that I already would like to discuss with you. First of all, let's return back to discussion of this area. Recall what we have said yesterday. This is trend line of the triangle. So we have the triangle here, right? That's it. Also, this is the weekly pivot resistance one and major 50% resistance that your currency likes most of all. You could see what has happened. Market has reached the upper border of the triangle, tested the weekly pivot resistance one, and pulled back. Usually, when the pivot resistance one holds upward action, it means that this is a retracement, not the new trend. If this is a retracement, the market hasn't broken this triangle up, it means that we have the bear trend, and the market probably should turn to the downside at some time. That's the first moment. Second thing that I think is also important, take a look that market has dropped out from this consolidation back again. This is important sign because usually when the market returns back in the side of some consolidation, that market protects and prevents price from returning back inside of it. You can see here. Recall what we have said when we discussed the possible entering short here. So that is important level because we prefer to keep the pure bearish scenario. We prefer to see that market will not return back in this consolidation. This has happened. So market usually protects previous consolidations. But as a result of the Fed meeting, market has returned back inside of it. And usually, in a normal development, if this indeed would be the bullish market, price should try to break it to the upside. As soon as market returns back inside of the previous consolidation, it usually breaks it in the opposite direction. But here we do not have it. So you can see the market has dropped out again, back down from this consolidation. This is not good sign for the bulls. This is not the bullish sign. Right now market stands at the support around double pivot point. So this is monthly pivot point and weekly pivot point. Currently it holds still above it, but as you can see, drop was really fast. And here we see some kind of the bearish engulfing pattern or something of that sort. Usually this pattern has the continuation, and that takes the shape of some kind of the A, B, C, top, D pattern to the downside. But in this case, as you can see, if this will happen, market will drop below the both pivots, and that will be the changing in the sentiment on the market. That's why, as I said yesterday, we should not overestimate the importance of this rally that has happened. On this rally, market wasn't able even to break the triangle, to stand inside of the consolidation to form some consolidation right below the trend line, because usually when market is preparing to show the breakout, it starts to form some kind of the tight range, tight consolidation below the potential potential trend line that it would like to challenge. But here we would not see any action of that sort. We see just return back into to the downside. So on the hourly chart, guys, today we will be watching for a couple of moments. First of all, take a look that market is forming the bearish grabber here, show the minor retracement, and it suggests some further drop. And we know that here we have the monthly pivot point and weekly pivot point, so we could get some kind of the A, B, C top, D pattern. That's what we'll be watching for. If this will really happen, then we probably could tell that market still keeps the moderate bearish sentiment. That probably no rally to the upside will happen, and market probably will return back to the downward action. It's really will be very probable if by the close of the current session, market will stand somewhere below the pivots, and maybe it will even shift the daily trend to the bearish side if it will drop a bit lower. So let's see what will happen. But currently, as I said, do not take any longs position by far. So see what will happen, because this action that we hear around the pivot resistance and with these consolidations, market first return it inside, then move out again. This is not really bullish. That's why currently I think that there's more chances that euro will continue dropping, and still in some time we will see the breakout of this triangle, maybe even on the next week.